Welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be talking about a stock that I own, and that is PayPal stock. This is one, unfortunately for me, that has come down quite a bit. My cost basis is at $168. Stock trades between $70 and $80 as of today. So let's jump in and do some stock analysis on PayPal, talk about its fundamental valuation, where it sits today, and what does the future hold for this one. Okay, here we are with PayPal on June 17th, hovering right around the $70 mark, kind of flirting with the 60s on this one. Again, my cost basis is $168, so I am well in the hole. And you see the 1-year chart. The high would have been, roughly this time last year, $286, maybe $300 on June 22nd, and it's been a downhill coaster all the way from there. And the recent news, not only what we've been seeing in the stock market as far as, growth names, fintech names kind of getting hammered along with, basically everything but oil stocks at this point. But the other thing that weighs on PayPal a little bit is its ties to cryptocurrency, which, by the way, it's not a huge crypto play in PayPal's world, but they do offer some services as it relates to Venmo and even standard PayPal, where you can buy and sell cryptocurrency. And as a matter of fact, they're having a rollout in 2022 where there's options to pay with cryptocurrency at certain vendors. So the recent crypto winter certainly hasn't helped a stock that was already struggling with their own EPS and revenue projections coming off a mega high during the pandemic, where of course e-commerce was a huge strength. But a lot of those trends have settled back into normalcy given the fact that more people are out and about. All right, let's take a look at some of the trailing metrics here on Yahoo as of today. You have a trailing PE ratio of 2350 and trailing EPS of 303. Now, what's important to know right off the bat, if you're new to analyzing PayPal stock, is that they actually are going to have a declining EPS situation here in 2022. In fact, in their conference call in April, they lowered their EPS guidance. And anytime you're getting into declining EPS, obviously folks are going to be concerned, particularly on the Wall Street side, and you're going to have lower price projections, etc. Now, on the bright side, revenues are actually going up, and the EPS is projected to recover into 2023. So for the purposes of this video, we are going to spend more time on looking ahead as opposed to looking in the past. But it is important to recognize where PayPal has traded at historically. So let's take a look at some of those stats next. Okay, so what about those historical valuation measures? Well, trailing PE we know is in the mid-20s. As of right now, based on EPS that has come in the past, right? So if you're in the mid-20s, first glance at that, dating all the way back to 2015, which is when PayPal actually came out on their own as an independent stock, it's obviously the best deal that you've certainly seen since its inception. Now, let's switch to forward PE, right? Because we know that the environment that we're in right now across the economy is rocky. And I think that for our purposes, forward PE is going to be a lot better barometer for where PayPal could land, particularly into next year. And at least on the next 12-month estimates from analysts, you have a forward PE of 19. If we go back to 2015, you were in the 24s. 2016, you had a 22. Those are essentially the low points, right? So when you get into 17, and obviously through the pandemic run-up, you were well into the 30s as far as a forward PE multiple. So this is a classic case, right, that you're seeing across this market where you have the multiple that people are willing to pay based not only on EPS growth, but sales growth. It's come down significantly. So as of today in the market, you've got folks willing to pay basically a 20x on forward PE, whereas, you only have to go back even pre-pandemic. Let's go to 2018 and 2017. you were at 30x. And if you think back to the first page, if you have a trailing 12 months EPS of around $3, if you were back at this 30x land, the price would be around 90. But PayPal's trailing 12 months EPS is actually going to be boosted at certain points across this year, and we'll get into that in a second. Now, some other trailing 12 months metrics. So price to sales right now at 3.5. Without question, that is one of the lower points that we've seen since inception. And the thing about price to sales on this one, although it's a metric I don't particularly use a lot, it's more of an eyeball thing for me. But sales and revenue is one area that PayPal is not anticipated to struggle with. So revenue growth here, not only in 2022, but into 2023 and beyond, revenue growth is fine. And now it's not as big as it had been. This is not a dead dinosaur that has no growth prospects whatsoever. They have long-term growth numbers in the double digits, at least on today's projections. But interestingly enough, even with flat earnings or just barely up earnings, depending on which 12-month cycle you look at, the PEG ratio, price to earnings growth, which is a 5-year metric here on Yahoo, you're under 1. It's a very, very strong position to be. And if you compare that historically, when they first came out, 0.43 was the lowest, but mostly across the board, we've been in that 1.5, 1.25 range. And so that's yet another metric that is trailing below historical averages. All right, now let's switch over and start looking at some of the forward metrics for PayPal. And for this, we're going to go to Seeking Alpha. And by the way, as we're going through these screens, if you're interested in learning more about Seeking Alpha, starting a free trial, getting 50% off a year of their premium service, check out my affiliate link in the description. Potentially help support the channel. It's a great service, and if you're new to the channel, I use it all the time on here. All right, now let's kick things off a little bit with sort of the momentum, because I think that this is where you're seeing the air out of the balloon for PayPal. And for the upcoming quarter, revisions for the past 3 months or so, you obviously, zero EPS up revisions is never really a good thing. But then you combine that with 35 down revisions, which honestly, it looks terrible, but it's not that surprising because PayPal themselves came out and lowered their own guidance. So it's no surprise that Wall Street analysts followed suit. Now, revenue, we have 2 revisions upward on revenue, 31 down on the revenue side. But you'll see here in a minute, even though these estimates are trending down, they're still positive. And in the case of revenue, revenue is still growing. So it's a lot of negative downgrades. It's a lot of negative headlines in terms of projections. But at the end of the day, PayPal as a corporation is still marching towards their business goals, right? They're still making profits. They are still making sales. They are still innovating. But let's take a look at this EPS revision trend. So we talked a little bit about fiscal quarter 2 and the estimate of 87 cents. That would be minus 25% versus Q2 of 2021. Now, there's a lot of things that factor into this. Most notably is, of course, the changing e-commerce environment. And we are also at the finish line of the eBay transition. So where we stand today, eBay is only 2 or 3% of PayPal's revenues. But back last year, they were a significantly bigger margin. And on top of that, e-commerce was going out the wazoo, as we all know. So eBay was having their own version of sort of a resurrection of a platform that's pretty much been flat for many years. They had a resurrection. That was good news for PayPal, but here we go. We got to start comping those things, and that's where it gets a little harder, particularly when you're coming out and the headline on earnings is minus 25%. Then we expect something similar for Q3, right? You get minus 12%. And then by Q4, though, this is where things are starting to turn back around. And at least from an estimate standpoint, you get back over $1, you start to grow that EPS again, plus 3.5% or so. And then as you head into Q1 of 2023, now you're growing again, albeit with the help of some of these negative comps. But since everybody's going to be looking forward at that point, it's still going to be growth into the future. Now let's take a look at revenue. And of course, with the contraction of e-commerce, maybe PayPal's not growing revenue anymore. Their stock certainly has fallen off a cliff. Fact of the matter is, that's just not true, particularly within the estimates. So you have year-over-year growth, projection for this quarter, 9%. And then you start to get into double digits again for the foreseeable future. Now, from an adjustment trend, if we look over this 6-month trend of how those projections have come in, they are indeed coming down, which I think is not really that big of a surprise considering what the world's going through right now in terms of inflation. But they're not coming down like falling off a cliff, right? They're coming down 6, 7%, something like that. There is 10% here, lopped off of June 2023, but where it stands today, it would still be plus double digits from an incremental standpoint. So looking at the momentum, it's obvious why PayPal has fallen like it has, particularly in a market that's sinking by itself. So they've definitely gotten dinged on estimates and assessments, right? There's your 6-month trend. You want to go up to EPS, that's really taken a hit, okay, on the 6-month trend. So to me, I'm not really surprised. I'm surprised that we're talking about $70, but I'm not surprised that they've gotten dinged here in recent times. And then you start to add in the fact that, basically every NASDAQ stock is down across the market, and you're kind of getting that compounding situation where PayPal's just in free fall right now. But the bottom line question for every stock is, is PayPal a buy at $72, right? And it's actually up 1.4% since I started talking about it, I guess. So they must enjoy this video. And in order for us to really answer that question, let's take a look at the forward metrics and stack them up on an annual basis and see where PayPal sits. Now, we talked about momentum in terms of quarterly projections and how those are up and down compared to years prior. Let's take a look at where things stand if you start thinking in terms of years, right? And ultimately, if you're investing in the current atmosphere that's going on with the stock market, I'm going to assume that you're a long-term investor. You're thinking about years, not quarters, right? You might trade on news for quarters. That's not something that I do. But here we're talking about buying PayPal at $72 for the next 3 to 5 years. How does that world look? Well, let's start on the EPS side. If you added up the consensus projections throughout this year, you come in with an EPS estimate of $3.90. And real quick, we're just going to look here at the PayPal investor update from April. And at that time, even though they were guiding down, they were saying 381 to 393 earnings per share on a non-GAAP level. So when we go back to consensus projections, we might even say the 390 is a little high if you want to be super conservative. So let's just call it 380. But even if you take it at $3.80, which is PayPal's own lowest guidance, you're at 1868 when I did the math. Then we look ahead to next year, 2023, which by the way is always looking ahead in the stock market. So as soon as they guide for this at that start of the 2023 fiscal year, you could be looking at plus 23% upside in EPS. 1473 is your forward PE. All right, flipping back to our historicals, we know that if we were to get PayPal at a 14 to 18 forward PE, looking ahead, that would be one of the lowest valuation points on forward PE that we've seen ever since PayPal came into play. And that's just on the EPS side. Let's take a look on the revenue side. So again, this fiscal year, $28 billion is the consensus right now. That's double-digit growth, okay, 11.7%. That brings your forward price to sales under these metrics to 2.91. December of 2023, you would have 33 billion if everything came in. Again, you're plus 15%. You're in that double-digit realm, which is important. And price to sales at 2.5. Going back to historicals, and as far as a 2.5 or 3 goes for price to sales for stock like PayPal, it's never really even been close, right? So you've got a 5 in their first year, and then of course, you know, the COVID bonanza. But let's just look at 2018. You're right in that 7 world, well before the e-commerce revolution took over for a year or two. Real quick, for those of you who get more into the sort of cash flow metrics, at least on Seeking Alpha, trailing 12 months cash flow, 14 times, and then price to cash flow looking forward would drop into 13 times. All right, now some final thoughts for PayPal stock from a person who owns the stock. And at least in the 1 year outlook, I think reasonable for PayPal in terms of purchase prices, anything under probably $90. Now, unfortunately for me, I'm at $168, so that doesn't help a lot in the short term, but I do have some optionality with this one because the first shares that I bought into are much higher than $168. And at least as of right now, I'm up on my realized gains and losses. So it could very well be towards the end of the year that I sell off a chunk of the high price ones, the 200s or wherever they stand at, you know, sell 5 or 10 of those, bring my actual cost basis down, take the loss, sort of tax loss harvesting. So that's one way I might approach this. Now, as far as the longer term, if you talk about 3 to 5 years and you think about Venmo, think about Amazon integrations, you think about finally chopping off the last leg of eBay so that the financial reporting cleans up a little bit. They also do stock buybacks in most years. We'll have to see if that continues. And I really like where PayPal's going. We're talking about an international payment processor that is not only vital to the e-commerce world, but the small business world too, and the host of different products they have for small business out there. And don't forget all of the potential optionality in Venmo, which is just not even scratched the surface. I believe that Venmo is still United States only. I'm not sure if they've rolled that out to Europe yet, but Venmo is not even international. It's not, I mean, they are trying to get it right on a replicable scale here in the United States before they launch that across the world. So at least in my book, there's a lot of positives on the table for PayPal, but to be very fair and clear here, I don't really expect the next 6 months to be a whole lot of hoopla. In order for this stock to really move the needle, I think we have to get the pressure off of the rest of the stock market, and then you might get into the 80s and 90s again. So if my best friend asked my opinion about PayPal stock, I would probably say I think you have time. I think you have some more months in this current environment before this one really turns it around. However, if you're in it for 3 to 5 years, which most of us probably should be at the retail level, then I think the product roadmap has plenty of upside, and it's certainly worth a chance at this price. All right, guys, let me know what you think about PayPal stock here today. Are you buying at $70? What's your cost basis? I hope everybody's doing well. Don't forget to check out that Seeking Alpha special offer in the description. We'll see you on the next video.